When most people start trading with just $100, something dangerous happens in their mind almost immediately. Logic shuts down, patience disappears, and imagination takes over. They don't see $100 as capital. They see it as a lottery ticket. They start thinking in extremes. If I can double this in a week. If I catch just one big move. If I'm smart enough, I won't need much time. Within days, the goal quietly shifts from learning to survive to trying to escape reality as fast as possible. And that shift is where most traders lose before they ever really begin. Turning $100 into meaningful money is not about speed. It is not about intelligence. And it is definitely not about finding the perfect strategy. It is about time. Long time. Years. Decades. The mindset that makes this possible is what professionals call the compounding mindset. It's the understanding that slow, controlled, repeatable growth will always outperform explosive shortcuts in the long run, every time, no exceptions. This mindset is deeply rooted in patience, discipline, and long-term thinking, and that's exactly why most people reject it. Because it's boring, it doesn't feel powerful, it doesn't create excitement. There's no dopamine hit in risking 1% of your account. There's no adrenaline rush in waiting for weeks without trading. There's no ego boost in making only 3–5% per month. But this is the same mindset that built fortunes across every field: investing, business, trading, even sports. The names change, the industries change, but the psychology stays the same. The people who last are the people who protect what they already have. This way of thinking forces you to do three things most traders hate. Protect capital. Grow slowly. And stop sabotaging yourself. The average trader looks at $100 and thinks, it's nothing, I can afford to lose this. The professional trader sees $100 as a seed. You don't eat the seed. You don't gamble the seed. You don't test the seed's potential by putting it in danger. You plant it. You water it. You protect it. And then you leave it alone. In trading, constantly checking your account, overtrading, jumping into random setups, or increasing risk out of boredom is the same as digging up the seed every day to see if it's growing. You're not speeding up growth, you're killing it. The $100 account demands respect, not because of its size, but because it reveals your character. How you treat small money is exactly how you'll treat big money later. There is no magical personality switch that happens at $10,000 or $100,000. Now let's talk about numbers, because this is where most traders completely misunderstand reality. If you grow your account by 5% per week, it feels laughably small. On $100, that's just $5. Most people would scroll past that number without a second thought. But compounding doesn't care about excitement, it cares about consistency. At 5% weekly growth, $100 turns into roughly $10,000 in under 5 years. That doesn't sound impressive to someone addicted to fast results. But here's what they miss: once your capital grows, the same percentage creates entirely different outcomes. The mindset doesn't change. The process doesn't change. Only the zeros do. And this is the part that separates professionals from gamblers. Gamblers want big wins now. Professionals want systems that survive long enough to scale. Most traders would rather risk 50% on one trade because winning feels meaningful. What they don't calculate is what happens when they lose twice in a row. Suddenly the account is crippled, emotions are shattered, confidence is gone. This is where the compounding mindset quietly eliminates chaos. Millionaire traders don't measure success trade by trade, they measure it over hundreds of executions, over months, over years. Look at the legendary traders of history. They didn't gamble their way up. They applied rules so boring and repetitive that most people couldn't follow them for more than a month. Their edge wasn't brilliance, it was discipline. The same mindset changes how you experience losses. Most traders see losses as personal failure, as proof they're not good enough, but disciplined traders see losses as data points, expected costs, business expenses. If you lose 2% today but follow your rules, nothing is broken. If you break your rules to avoid that loss, everything is broken. This emotional stability is critical. The moment one bad trade pushes you into revenge mode, you're no longer trading, you're reacting, and reaction is where accounts die. Trading is not just about charts and indicators, it's about your mental state while making decisions. If you're chasing quick money, you live in constant anxiety. Every candle feels urgent, every pullback feels threatening. You can't think clearly. The compounding mindset removes this pressure. It shifts your goal from make money today to make good decisions consistently. And when the pressure disappears, decision quality improves automatically. Another trap traders fall into is comparison. Social media makes it worse. You see screenshots of someone turning $500 into $5,000 in a week. What you don't see are the blown accounts, the luck, the silence that follows. The compounding mindset ignores noise. It focuses on building your journey at your pace with rules you can follow even when emotions are loud. Imagine this scenario. You start with $100. Your goal is 3-5% per week. You have a tested strategy that gives you 2-3 high-quality trades per week. Each trade risks 2% with a 1-2 risk-to-reward ratio. That means risking $2 to make $4. It feels insignificant. It feels slow. But after months of consistency, the account grows. At $500, each win is $10. At $5,000, it's $100. Same rules, same mindset, same discipline. This is how small accounts grow without blowing up. Starting small also forces you to master risk control before real money is involved. Many traders receive large capital too early from savings, loans, or prop firms and lose it because they never learned discipline on small amounts. If you can respect $100, you can respect $100,000. If you can't, no amount of capital will save you. The compounding mindset is not passive. It doesn't mean waiting and hopping. It means actively refining your strategy while staying inside strict risk boundaries. You're not swinging for home runs, you're collecting base hits. Ask yourself this honestly. Is it better to spend 6 months chasing dopamine, blowing accounts, and restarting? Or 6 months building consistency, discipline, and a track record that scales? One path gives excitement now and frustration later. The other gives boredom now and freedom later. This mindset also reshapes your identity. You stop seeing yourself as someone trying to win trades and start seeing yourself as a professional executing a system. Professionals think in probabilities and time horizons. Gamblers think in luck and single outcomes. The market rewards one and punishes the other. Your $100 account is not a limitation. It's a training ground. And patience is not just waiting, it's waiting without self-destruction. True patience is watching price come close to your entry and still doing nothing because the setup isn't perfect. Not trading is a decision. In many cases, it's the best one. The market constantly tempts impatience. Every candle whispers urgency. Without ruthless patience, those whispers turn into commands. The impatient trader finds trades everywhere. The patient trader finds trades only where the odds are heavy. Ruthless patience feels like inactivity, and inactivity feels wrong. Our brains associate productivity with action. In trading, inactivity is often the highest form of discipline. Winning isn't trading every day. Winning is following your plan every day. Losses don't disappear, but they stop controlling you. Emotional detachment becomes your shield. The market doesn't care about your feelings, it simply reflects your discipline back to you. No single trade matters. Only the series does. When you stop needing the market to validate you, everything changes. Losses become routine, wins become expected outcomes of good execution. Ego loses its grip. And finally, there is adaptation. Markets evolve. Conditions change, strategies stop working. The trader who survives is the one who adapts without ego. Consistency is not stubbornness. Discipline is not rigidity. The market rewards flexibility built on strong principles. The trader who turns $100 into $1 million is not the one who finds a perfect system. It's the one who reshapes themselves again and again as conditions change. Discipline, patience, resilience, adaptation. Master these and account size becomes irrelevant. The market is a mirror. If you're rigid, it breaks you. If you're fluid, it carries you forward. That's how you survive. That's how you grow. That's how $100 becomes something life-changing. If this message resonated with you and you want more deep trading psychology like this, subscribe so you don't miss the next one. And let me know in the comments, what mindset shift changed your trading the most? I read every single one.